please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Going and get straight to the numbers out here in Asia this morning. This is how the markets are doing in the region. We've got Japan and South Korea. They've been in play for an hour and Australia's been up and running for 2. We're seeing gains right across the board today. Now, this is not really surprising given the strength we saw on Wall Street in the overnight trading session, with the Nasdaq hitting yet another record high. Lots of earnings reports to talk about, which of course we will cover throughout the show today. In Japan, we've got the Nikkei on Friday hitting a 21-year high, so we're holding above that level. 22,049 is where we're sitting at the moment. We had retail sales up earlier today, September up 2.2% versus the year-on-year forecast, which was for around about a gain of 2.5%. Slightly softer than expected, but still very strong. And of course, we've got the BOJ meeting both today and tomorrow. And this is only one of the central banks, the number of big central banks that are meeting this week, because it's a huge week, both on the economic and, of course, the political front as well. Tax reform, the possibility of a new Fed chair being announced, those earnings that I spoke about, and NFPs due out on Friday. A lot to talk about, huge amount of event risk out there if you are in these markets right now. So let's talk about what's coming up. Dan's joining us now with all of those details. Good morning to you, Dan.
Hi there, Oriel. Plenty of risk events on the horizon this week for traders to keep watch on. Not one, not two, but 3 central bank meetings in focus. So to start, here's how US futures are shaping up right now. We've seen US stocks actually have 7 straight weeks of gains now. So the Wall Street Open is going to be very, very important to watch. Investors really questioning right now if earnings have so far justified these hot valuations and how much of the pending corporate tax cut is actually priced in. So we're looking at losses still several hours away, I must point out, on the Dow and the 500, but the Nasdaq is set to open higher. Now, tax reform takes centre stage with the Republicans due to unveil details of their new tax plan on Wednesday. Meanwhile, the Bank of England could be set to hike rates for the first time in a decade, and the BOJ is likely to stay the course. President Trump also likely to pick his new Fed chair this week, even as the FOMC holds a 2-day meeting and he heads to Asia. That's going to be important to watch as well. It's also reported that Trump's pick is Jerome Powell. You've probably been seeing these headlines across the weekend. He isn't an economist, but he is seen as being less hawkish than the rival contender, John Taylor. So watch that closely. Meanwhile, the earnings parade does slow down a little bit this week, but we still get the likes of Pfizer, Facebook, Alibaba and Berkshire Hathaway all reporting numbers. Apple also saying across the weekend that the iPhone 10 pre-orders are, quote, off the charts, and it's going to be reporting numbers on Thursday. And then last but not least to watch this week, the latest non-farm payrolls report also due out on Friday. We're expecting a rebound here after last month's hurricane impact. So 315,000 jobs expected to be created in the month. The unemployment rate stateside at 4.2%. So certainly a lot to watch, Oriel.
There's a huge amount to watch out for. Okay, Dan, look, thank you so much for that. Bernie, let me bring you in here into the conversation, because I think one of the most interesting parts of what we're expecting to come out this week is who the next Fed governor is going to be, because this has an impact on so many different levels. And the fact that we're now expecting or hoping, according to the word on the street, that Donald Trump is going to announce his pick for Fed chair on Thursday this week, which of course is Friday morning Asia time, is pretty interesting, because, you know, he was nominated to the Fed board by Obama. He's been seen as a bit of a moderate when it comes to monetary policy. We have spoken to some of our experts on the program about what this means going forward and what Jerome Powell is really like, and you know, what he stands for, how this may change the future of interest rates. And here's what Alan Blinder, who's a former vice chair of the Federal Reserve, had to tell our colleagues.
I think Jay Powell, in terms of monetary policy, is probably a continuation of the Janet Yellen policies, at least for a while, until he sort of gets his sea legs in the chair. He's probably a little more conservative than Yellen is, but it's not a gigantic difference. The bigger difference would probably be on regulatory matters.
You know what's I find very interesting here, Bernie, is if Jerome Powell is picked to be the next Fed governor. He would be the first Fed chair since 1981, according to Reuters, without a PhD in economics. Now, is this a tick in his favour? Well, when you consider the Trump administration and their skepticism on academic experience, perhaps it is.
Interesting. It would, but then again, there are other very smart people who have been in and out of the Fed that don't have PhDs. I suppose after a certain academic stint, on the job training, lots of it can count for a lot as well. I mean, there was a while there where President Trump was putting in 4-star generals. I mean, I'm not saying that a 4-star general would make sense at the Fed, but that wasn't completely out of the realm of possibilities. Another thing that a little concerning to some people is, this whole tax reform thing. It was supposed to be a much easier thing at the very beginning, but it's proving to be a real juggernaut, a real difficult ball of wax because of vested interest, right? I mean, on the face of it, simplifying the tax code, bringing down rates for the middle class and then eliminating loopholes and a lot of deductions, just simplifying the whole dang thing so you don't have pages and pages and pages on tax returns is supposed to be a good thing.
Yeah.
But when you take something away from people, even though you're replacing it with something else, people still notice it, like mortgage deductibility. Okay, watch out for this. National Association of Home Builders is digging in firm against talk that they're going to do away with mortgage interest deductibility and deductibility of state taxes for high tax states like California and New York is going to be an issue too. There are enough Republicans who are against eliminating all those deductions to actually put a spanner, really put a hiccup in this tax reform plan. So it's not going to be 100% smooth sailing, I guess, is the main point there, Oriel.
Absolutely, Bernie, you're spot on. Far from smooth sailing. On top of all of that, you've got to look at the Mueller investigation, when, of course, later on tonight we are expecting to hear more on that. In fact, we may even see what the first charges are and who they're going to be levelled against, and that could come tonight as we hear it. I mean, I guess, if you sum up all of what's going on at the moment, this past week, and in fact looking ahead, the week ahead is looking to be an incredibly confusing week when it comes to politics. Is this a good thing? Probably. When it comes to the current administration in the White House, it's probably good for Donald Trump.
Yeah, well, we're going to see some resolution, obviously, especially on the Mueller front, on the Russia investigation. Of course, since that Mueller investigation started, the narrative changed, didn't it, in the last week or so, to Democrats paying good money for a dossier on the Trump administration, so paying money to smoke out if there was anything that was actually happening. I mean, this stuff doesn't taint just one person or one party or whatever. I mean, what comes around goes around in Washington. That much we know, right?
That much we know.
Nobody's untainted.
And you know what? I'm going to pull out my crystal ball here, Bernie, and suggest to you that there is, without question, a movie in the making when it comes to what we've been watching over the last 12 months or so, or a miniseries at the very least.
Yeah, Oliver Stone and Michael Moore probably would lead the pack for who would produce it, among others.
There you go. All right, so let's go from the US now into Europe, because there's another very important story that we're watching out here, and that is, of course, Spain. Thousands of supporters of a unified Spain thronged to the streets of Barcelona over the weekend. Let's bring in Shri for more on this. There's been some fairly significant steps being taken when it comes to what's going on in Catalonia, at least of which we might now see some kind of investigation into Catalonia's leader.
That's right, and a lot has happened in the past 48 hours, and there are market implications here, so let's try and make sense of it all. First things first, Barcelona has made a unilateral declaration of independence. Madrid has given that very, very short shrift, and their response is to implement and impose direct rule. So what this means in practice, and enforcing that direct rule edict could be fraught with problems for Madrid if the Catalan leadership goes quietly. Let's bring in Spain's foreign minister and see what he had to say about the legitimacy of the Catalan leader, Carles Puigdemont. All right, we can't play that soundbite, but what we do also know is that Madrid has called regional elections for December the 21st. And I think between now and then, there is going to be a lot of fluidity in European markets and a fair degree of volatility. And here's why. The initial polls show that anti-independence parties with only a small margin of support. Then again, the Sigma DOS survey for the El Mundo newspaper has only polled 1,000 people. So the issue here, Bernie, is uncertainty. Who really has the broad base of support? Is it the pro-independence parties? Is it anti-independence parties? Is it Madrid or Barcelona? So this is up in the air. Markets don't like uncertainty. I think this is going to give rise to volatility in the run-up to December the 21st poll.
Just what we need, more volatility. So many hiccups in the world right now. Can't stand the tree. Okay, we've got earnings galore, up, down, center, left, right here in Hong Kong and China. So many earnings, we couldn't possibly get them all out in one stream of consciousness.
I will try.
She will try. What a trooper.
So what we've been seeing in this earnings season is that a lot of Chinese blue chips are really rallying on corporate earnings, beating expectations so far this season. So let's kick things off with the telco players, because domestic demand story in China really playing out here, even when it comes to mobile data usage. So we've got China Unicom saying there was a strong acceleration when it comes to mobile data usage, 9-month net profit more than doubling. And this is sort of echoing what we saw with the numbers of China Mobile as well. Moving on to airlines, we heard from Air China over the weekend, a 31% rise when it comes to third quarter net profit. But it's really about the strong yuan really masking the low passenger yields, and saw the same issue with other airliners as well. And staying with vehicles, sort of BYD, but this is not a good one, because we've got a profit warning coming from this green car maker in China, saying that 2017 net profit could come down by as much as 20%. And we already saw a little bit of dent coming through for the third quarter, net profit down 24% on year, and by a similar margin for the first 9 months of this year. Now, saving the best for the last, Chinese banks, mainland banks, the top 5 of them would have finished their reporting by the end of today. We've got ICBC, Bank of China, Ag Bank, all reporting later today. And we heard from China Construction Bank on Friday. And over the weekend, we heard from Bank of Communications reporting on Friday after market close. Now, this is the number 5 player in the space by the size of assets. We got a third quarter net profit up 3.5% on year. Not bad, but this is a softer gain when we're looking at 4% of analyst estimates in a Reuters poll, and no change when it comes to its NPL. By the end of September, we had 1.5%, well below the industry average. Not bad.
Well, and Uwe Part from Capital Link was telling us that it's still an attractive trade, that it's not a crowded trade, even though people have talked about the banks so much with the numbers that they reported. So he says, you go. Thanks. Thanks, Sherry. All right, we are getting ready, of course, for the opens. A lot of these names that Sherry has gone through, we've been talking about, are going to be in play in about 16 minutes. And also Stock 5, the big blue chip HSBC. Well, not as big, Emily, as they used to be, but still pretty big, right? I mean, they still command a big chunk of the Hang Seng Index, even though its heyday may be over.
Well, you know what? Maybe the stock value is not quite where it used to be, Bernie, but it is still a big heavyweight on the Hang Seng Index. It ties for the #1 most heavily weighted stock on the Hang Seng Index with that of Tencent. Both have an equal share, 10% weighting, and we are waiting on the results coming out at midday today, 12 p.m. Hong Kong time for the third quarter results, and at 3:30 p.m. Hong Kong time they'll come out with their analyst conference call, chaired by Group CE Stuart Gulliver and the company's finance director Ian McKay. We are expecting an increase in terms of its pre-tax profits and revenues on the year-ago period. In 2016, in the same quarter, it was $843 million in pre-tax profits on $9.5 billion in revenue. They already announced a share buyback to be completed by the second half of this year, $2 billion. So we're looking to $2 billion. So we're looking to whether or not they're going to be continuing with this, because just in the last just over a year alone, alone, the company has embarked in $5.5 billion in share buybacks. Keep an eye out on the stock. HSBC has been an outperformer, gaining 24% year to date. That is the Hong Kong listed stock. The London listed shares up something like 15%, and the ADRs in the US also up more than 20% year to date. So not too bad for shares of HSBC wherever you are in the world.
State media in China is reporting this morning that President Xi Jinping has given one of his allies a leg up, promoting Li Qiang to Shanghai party boss. He replaces Han Zheng, who was promoted to the Politburo Standing Committee last week. Li himself will leave his post as Jiangsu party chief. Meantime, Li Shi, the Liaoning party boss, will take over as chief of Guangdong province and replaces Hu Wenhua, who until recently had been seen as a potential Xi successor. Victor Svets is head of Asian strategy, commodities and global markets at Macquarie, and joins us on Squawk on this Monday morning. Morning, sir.
Morning.
Gee, just when you thought the 19th Party Congress was over and done and dusted, it's the gift that keeps giving.
That's true. That's true.
Any meanings to these names or the elevation? It's all the same story, isn't it? The Xi Jinping consolidating power and spreading the goodwill amongst his trusted and reliable ones. Mm-hmm.
Right. I mean, China is one of those countries that always sort of reformed itself into autocratic state. Now and again, it's sort of fallen apart into collective leadership. Sometimes it falls apart into anarchy. But at the end of the day, it's always reconstitutes itself as a relatively autocratic entity. I think in one of our reports we compared to Russia. It's very, very similar process in both countries. And so when I look at the Standing Committee, when I look at the Politburo as a whole, when they look at strengthening of party hold over the military, the message is the same, that the lessons China learned from the Soviet debacle is that never underestimate the role of the party, never disarm the party, always make sure that the growth rates are maintained, and that's the essence of the sort of business model. So I don't necessarily look at every name other than assume that over time it's actually the authority will get more and more compressed.
This sounds like it's a net positive for China. What happened at the Congress? This socialism with Chinese characteristics. Sounds like you're basically it sounds like you're a fan of what happened.
Well, the way I look at it, nobody wants anarchy, nobody wants challenges or problems. The key question is whether sort of the new world of rising return on digital capital, rising return on social capital is actually suitable to a country that desires harmonious development, lack of disruption, and also increasingly centralized state. I'm not totally convinced that longer term that actually is the right business model, but in the short to medium term, it certainly is.
Victor, great to have you with us. You sound quite calm on the outlook for China and not too concerned at all, but I've got a piece of your research in front of me when you're looking at China and you're talking about the fact that the risk of policy errors is high. So how do those two views come in together?
Well, there is always a risk of policy errors. For example, China in late 2014 and 2015 truly attempted to deleverage. That was, in my view, a policy error. That's part of the reason why commodity prices crashed through 2015. So there is always a possibility of policy error. But the same applies, by the way, to Federal Reserve. The same applies to central banks as well. But from my perspective, the key to my view is that the current business model of China is still maintainable. There is really no need to believe that the debt levels that they're accumulating somehow will dislocate China. In fact, I believe that the real private sector debt in China is probably less than 50% of GDP. So all those numbers of over 300% are quite meaningless.
Interesting. Okay, Victor, appreciate the time, FaceTime. You have a good, profitable week ahead, and we will catch up soon enough. Victor Svets.